Hey everyone, welcome back to the Jeff Trapp Podcast. And today I want to start with a headline that probably caught your attention over the last week or so. And it says Microsoft reportedly paid just 2.44% in current federal income taxes. And when people hear something like that, the immediate reaction is usually, shoot, that's not fair. They're cheating the system. The tax code is broken. But before we jump into conclusions, let's make you ask a different question. What if the headline isn't telling you the whole story? Because today's episode isn't about defending Microsoft. It's about understanding something every business owner should know. Fortune 100 companies don't have access to a different tax code than you do. They simply have a better strategy. And if you're a business owner, there's a lot you can learn from that. Now, Microsoft isn't the only major corporation that's reported paying a very low effective tax rate over the years. According to the Institute on Taxation and Economic Policy, which analyzed the financial statements of hundreds of consistently profitable corporations over a 5-year period, 55 companies paid effective federal income tax rates below 5%, and 23 profitable corporations paid zero or even negative federal income taxes during that period. Some of the household names you've heard of: Netflix, Nike, FedEx, GM, AT&T, Bank of America, Citigroup, T-Mobile, and of course, Microsoft, which brings us to our discussion today. Now, does that automatically mean these companies are doing something wrong? Absolutely not. It means one thing. They have a team of tax attorneys, tax accountants, financial analysts, economists, and tax strategists whose full-time job is understanding one of the most complicated documents ever written: the United States Internal Revenue Code. The real question isn't how did they get away with it? The better question is, what incentives did Congress intentionally create that these companies understood and how to use it? Because here's something most people never think about. Congress could eliminate many of these tax incentives tomorrow if they wanted to, but it doesn't. Why? Because many of these provisions are designed to encourage companies to invest in research, build factories, purchase equipment, create jobs, develop new technology, invest in infrastructure, and stimulate economic growth. The tax code just isn't a system for collecting taxes. It's also a system for directing economic behavior. Or said another way, the tax code just isn't a book that tells you how much tax to pay. It's also a playbook that tells you what Congress wants businesses to do. So let's clear up one thing. One of the biggest misconceptions in America, people constantly confuse tax avoidance with tax evasion. They're not the same thing. Tax evasion is illegal. It's hiding income, making up deductions, keeping 2 sets of books, lying to the IRS. People go to prison for tax evasion. Now, tax avoidance is arranging your affairs legally to minimize your taxes. And that's exactly why Congress created the tax code. Think about it. If Congress wants businesses investing in research, they create the research and development credit. If they want businesses buying equipment, they create Section 179 and bonus depreciation. If they want Americans saving for retirement, they create retirement deductions. If they want investment in struggling communities, they create opportunity zones. These aren't loopholes. These are incentives. They're written directly into the Internal Revenue Code because Congress wants businesses to behave in a certain way. So now let's get back to Microsoft's reported 2.44% in federal income tax. Here's the word almost every headline leaves out: current. It refers to Microsoft's current federal income tax expense. That is not necessarily the same thing as its total effective tax rate. Public companies prepare financial statements under accounting rules. Then they prepare tax returns under tax law. Those are two completely different systems. Timing differences, deferred taxes, depreciation, tax credits, foreign tax rules, loss carryforwards, all of these affect what actually gets reported. Without reading Microsoft's complete financial statements, nobody can honestly tell you what exactly that percentage represents. That's why the headlines often create outrage when they should create curiosity. Here's the biggest lesson. Microsoft isn't using secret tax laws. Apple isn't using secret tax laws. Amazon isn't using secret tax laws. Neither is Nike or FedEx or GM. They're using the exact same Internal Revenue Code that applies to every business owner in America. The difference isn't the law. The difference is the team. Many Fortune 100 companies have tax departments that rival the size of regional accounting firms. They have tax attorneys, CPAs, financial analysts, international tax specialists, people whose only responsibility is thinking about taxes every single day. They're asking questions like, should we accelerate depreciation? Can we qualify for this credit? How should we structure this transaction? Should we recognize income this year or next year? What's changing in the tax law? How do we maximize after-tax cash flow? They're planning all year long, not just during tax season. So now you may be thinking, I don't have Microsoft's budget, and neither do I. You're right. But here's the good news. You don't need a 300-person tax department. You just need somebody who's in your corner, who's thinking strategically all year long. A proactive tax strategist, someone who's asking, should I become an S corporation? Would a retirement plan lower my taxes? Should I use bonus depreciation? Would cost segregation help? Do I qualify for the R&D tax credit? Should my entity structure change? Could the Augusta rule benefit me? Are you taking advantage of every incentive Congress intentionally created? These aren't exotic loopholes. They're legitimate planning strategies available to many business owners who qualify. The difference is planning before you're in instead of after the fact. Here's the biggest mistake I see business owners make. They treat taxes like an annual event. They meet with their CPA in March, hand over the documents, sign the tax returns, and ask, hey, how much do I owe? At that point, it's already too late because tax preparation records historical data. Tax planning changes the future. That's the difference. The largest companies in America aren't waiting until tax season to think about taxes. They are planning all year long, and every business owner should be doing the same thing. So what should we really take away from Microsoft's reported tax rate? Here's my perspective. Microsoft didn't discover some secret section of the tax code that no one else knows about. They simply understand the rules of the game. The United States tax code isn't just a system for collecting revenue. It's one of the government's most powerful economic policy tools. Congress intentionally creates tax incentives to encourage businesses to invest in research, purchase equipment, build facilities, hire employees, develop new technologies, expand operations, and create economic growth. When businesses do those things, Congress rewards the behavior through deductions, credits, accelerated depreciation, and other incentives written directly into the law. That's not an accident. That's exactly how the system was designed to work. Companies like Microsoft understand that. They invest heavily in tax planning because every dollar they legally save in taxes is another dollar they can reinvest into their business. More research, more innovation, more employees, more expansion, more opportunity. That's exactly what Congress hoped businesses would do when they created these incentives. Now ask yourself this. If a $1 billion company invests in tax strategy every single day, why wouldn't you? You may not have Microsoft's resources. You may not have a department filled with tax attorneys and accountants, but you don't need one. You simply need a proactive tax strategist who's helping you understand and apply the same tax code that's available to everyone else. Because the biggest difference between a Fortune 100 company and most small business owners isn't access to different tax laws, it's access to better planning. And I'll leave you with this. The tax code is not a punishment system. It's an incentive system. Once you understand that, you stop asking how much you owe and you start asking, what does Congress want me to do? If Microsoft has tax professionals working on strategy every single day, why are so many business owners only talking to their CPA once a year? If you'd like to find out whether you're leaving money on the table, schedule a complimentary tax strategy review with the tax planning pros. We'll review your entity structure, retirement planning, depreciation opportunities, tax credits, income timing, other planning strategies that may be appropriate for your specific situation. Because our goal isn't to help you pay less than you legally owe. Our goal is to make sure you never pay more than the law requires. Thanks for listening to the Jeff Trapp Podcast. If you found value in today's episode, subscribe to the podcast, share this episode with another business owner, and I'll see you next month. Have a great one. Bye-bye.